Major U.S. stock market indexes appear to be moving in a downwards fashion for the past 2 days, yet are still near their all-time high figures. In today's report, we intend to focus on the implications of the U.S. elections and the issues surrounding McDonald's quarter-pounder hamburger and the fundamentals with the expected earnings report releases in the coming week. The report is to be concluded with a technical analysis of S&P 500's daily chart. As of today, we are less than 2 weeks away from the U.S. presidential elections, which will see Vice President Harris take on former President Trump in a race that remains too close to call. In particular, the lead that Vice President Harris appears to have had over the former president in the key swing states appears to have withered down to 1%, with some recent polls giving former President Trump a slight lead in certain swing states. However, the two candidates appear to be neck and neck on numerous fronts, and thus no clear-cut winner has emerged as we enter the final stages of the U.S. election cycle. Nonetheless, the improved possibility of a Republican president in the White House could potentially provide support for U.S. stock markets, as former President Trump has vowed to extend corporate tax cuts signed into law during his first term, which are set to phase out in 2025 according to ABC News. Yet with the race being this close, a second level of uncertainty appears to be taking place, and this is in regards as to which political party will be able to win a majority in both the House and the Senate, or if they will each take control of one legislative branch of the U.S. government. Moreover, should the elections be decided by a narrow margin, we may see Trump or Harris contesting the results, which could prolong the entire process. Overall, the increased uncertainty surrounding the U.S. presidential elections alongside the elections for the U.S. Congress could increase volatility in the U.S. equity markets. Furthermore, should there fail to be a clear-cut victor, the uncertainty that may ensue could weigh on the U.S. stock markets and vice versa. The U.S. Center for Disease Control announced on Tuesday that an E.coli outbreak was linked to McDonald's famous quarter pounder. The E.coli outbreak, per a report from Yahoo Finance, has resulted in the death of 1 individual and the hospitalization of other 10, with most sick people are reporting eating quarter pounders from McDonald's, per the CDC report. Following the announcement by the CDC, McDonald's announced that it would be removing that particular hamburger from restaurants in the impacted areas. The announcement by McDonald's and the report by the CDC that the company has been linked to the E. coli outbreak appears to have weighed on the company's stock price. In conclusion, should the CDC's investigation uncover further food ingredients that may have been linked to E. coli outbreak in the US, it could further weigh on the company's stock price in the future. On the flip side, should the investigation conclude that no further food ingredients have been contaminated, it could provide some relief for the company's stock price. The US 500 appears to be moving in an upwards fashion, yet some signs appears to be emerging that the bulls may be losing some steam. Nonetheless, we opt for a bullish outlook for the index, and supporting our case is the RSI indicator below our chart, which currently registers a figure above 60, implying a bullish market sentiment in addition to the upwards moving trend line, which was incepted on the 8th of August. For our bullish outlook to continue, we would require a clear break above the 5,886 resistance line, with the next possible target for the bulls being the 6,150 resistance level. On the flip side, for a sideways bias, we would require the index to remain confined between the 5,675 support level and the 5,886 resistance line. Lastly, for a bearish outlook, we would require a clear break below the 5,675 support level, with the next possible target for the bears being the 5,400 support line. Thank you for tuning in to our financial news. From all of us here at Iron